CNBC TV 18, celebrating 15 years of leadership.
Good evening. Welcome to Markets Today. I'm Sonia, and joining me from the Delhi News Center is Turbhi Upadhyay. What a volatile day it was for the markets. By the end of the day, the Nifty did end higher by about 0.6% above that 8250 odd level, but it was courtesy just a couple of stocks like HUL and Infosys. If you leave those stocks aside, then it was a pretty choppy day for the markets, to say the least. In fact, this was such a volatile week, but by the end of the week, you get an uncomfortable feeling because the Nifty and the Sensex both go home with losses of 1.5% this week. Surbhi, hi, good evening.
Good evening, Sonia. I'm just trying to see the more optimistic side of things, trying to point out the silver lining. At least the ring is towards the end of the week is a little positive. At least the Q3 season has started off on a bit of an up note thanks to Infosys. Let's quickly run through the top stories. It's been a positive end to what has been an extremely volatile week for the markets. The Nifty today gains 50 points to close just below the 8,300 mark. The Sensex rallies 0.7% as well. FMCG, pharma and IT stocks have been leading the buying. Mid-caps, however, have a quiet day of trade with the mid-cap index closing absolutely flat.
And Infosys rallies 4% after reporting a good set of numbers. The dollar revenues grew 0.8% quarter-on-quarter in line with estimates, while the margins beat estimates, rising 65 basis points quarter-on-quarter to 26.7%. Also, the company maintains its FY15 dollar revenue guidance of 7 to 9% and reports a volume growth of 4.2%, which is the highest in the last 3 years.
Plenty of action in the oil and gas space. Videocon Industries hits 20% upper circuit on a new oil discovery off the coast of Brazil. Meanwhile, ONGC and Oil India move higher on hopes that these companies will have a lower share in the new subsidy sharing formula being drawn up by the government.
All right, those are all the top headlines, and here are the experts that we have for you on the show in the next half an hour. Market perspective from Sunil Singhania of Reliance Mutual Fund. The management of tech major Infosys will talk about their Q3 performance, and we'll also get you the analyst's take on the earnings this time around.
Okay, so before we get to all that perspective, let's first bring you the day's trading highlights. The bulls have kept the bears at bay at least for the second straight session. Major indices today ended the volatile day of trade on a strong note. The Sensex gained over 183 points thanks to the rally in the last hour of trade. The Nifty also closed in on the 8,300 mark after adding about 50 points today. Well, it was all about blue chips as mid-caps underperformed in trade. Anuj Singhal is now here with the highlights of what we've seen. Anuj, the bulls prevailed, but as Sonia has been pointing out, there's a lot of volatility, a lot of choppiness. How convinced are you?
Well, the market opened with a gap up, then had a 100-point decline, and then managed to recover all of that and close at high point of the day. So it was quite volatile. In the end, the bulls still had the upper hand, though the mid-caps underperformed a tad in today's trade. And really, while it was all about Infosys, the stock that really helped the market today was Hindustan Unilever. Let's talk about all the stocks actually. Right on top, of course, was Infosys and all the IT names. Infosys posted decent numbers. The stock was up close to 5%. And then, of course, Tech Mahindra was also up 4%. TCS was up 3%. But really, the story of the day and of the week has been Hindustan Unilever. Take a look at this. Up 6% today, but up 15% for the week. That's the lever stock that we're talking about. Really a remarkable move on this particular one. Some other prominent Nifty winners included ONGC, where reports indicate it may not have to now provide for subsidy burden for this financial year. Reliance was up 2% and Tata Motors as well up 2%. In the pharmaceutical space, we had some big gainers like Dr. Reddy's, Cipla and Lupin as well. They were all higher. On the losing side, ICICI put quite a bit of pressure on the market today. That stock was down close to 2%. DLF was down 3% and Bajaj Auto down 3% as well. And in the mid-cap space, some winners first. We had big gains in Videocon, locked on circuit, Intellect Design, locked on circuit, and Pipa Work. That was up 7%. On the losing side, though, we had Ashok Leyland. That was down about 4% on profit booking. Suzlon down 3%, and Idea Cellular was also down 3%. Not strictly a mid-cap, though, but these were the stocks that were losing ground. So, well, all in all, a good day for the market, though a bit of volatility is something that would confuse some bulls now. So let's see how things go. As of now, it appears that maybe the worst is over for the market, though the Nifty needs to go past 8,400 or 8,450 to go back into that bullish trend.
All right, Anuj, thanks for that. So by the end of the week, the markets ended up higher, at least for the day today. The Nifty was up 0.6%. But time now for some market perspective. We spoke to Sunil Singhania, CIO Equity at Reliance Mutual Fund earlier today from the sidelines of the IAIP conference. And he says with the highest ever participation seen in the conference, it is clear that interest in India is very high.
From an investment conference perspective, I think the number of registrations we have in this conference is the highest ever. So that clearly shows that interest in India is definitely high. The mood is very much positive compared to what it was last year. So last year we had some hope. This time I think the hope is really getting translated into a lot of optimism and a lot of enthusiasm for the economy as we move forward. So I think it's great times. Our view is that any corrections, even in the future, are going to be swift and short, both in terms of the percentage corrections as well as the time correction. And I think our advice to investors has always been that use volatility as your friend and don't make it your enemy. So I think use this corrections to your advantage. The scenario going forward, even from a global economy perspective, is not worrying. From an India's perspective, as I mentioned earlier, there's a lot of enthusiasm, there's a lot of optimism. Stocks are not cheap. You have to be careful of what you're buying, but there is still a long way to go. That would be our perspective. Stock selection, even within sectors where you're positive, will become very, very important. So our call would be that stick to quality, stick to balance sheets where it is repairable.
All right, so that's perspective on the market action. Let's now look at what's been happening in the futures and options space in trade today. Nigel has the details on that. Nigel?
Well, just looking by the derivatives data, in fact, you can say that a near-term base has been formed for the Nifty at around that 8,000 to around the 8,100 odd level. There was some lower level put buying, but in today's trade itself, put traders, they made big money. So the 7,800 put added more than 7 lakh shares. The premium were there, crashed from close to $20 to around 14 rupees. We saw the 8,100 put as well. So aggressive writing, that one as well added a good 7 lakh shares. While the 8,200 put added close to around 6 lakh shares. The premium there, remember, was close to around $95 when we started off trade. It ended at around 67 rupees. That tells you that in fact that 8,100 odd level should hold out at least in the near term. But importantly, traders are not really betting on the Nifty going much higher. But just take a look at some of those call buyers. 8,600 call. It did see some unwinding pressure in today's trade. While the 8,400 call as well, you were making money if you were a buyer on that one. But there was more unwinding on that particular strike as well because it shed close to around 4 lakh shares. Take a look at the Nifty. It moved higher in today's trade. It ended higher by close to around 45 points approximately. Big buying was seen on HUL. That was a big start of the week. That stock continued to see buying interest even in today's trade. While Infosys posted its numbers, there was a lot of volatility, but it appears that in fact there were some fresh longs getting stacked up into the system. Tech Mahindra took a cue from Infosys because that one as well did add a good amount of open interest, and big buying was seen on that counter as well. The big boy over there, Reliance Industries, came in for a big short covering bounce, as was the case with something like an ONGC. Remember, both of them have been underperformers. Both of them saw a short covering bounce in trade today, but the mid-cap underperformance is something that stood out, and we did see shorting on the likes of Idea as well as Canara Bank. Both those two stocks did see selling all through the trading session.
All right, Nigel, thanks so much for pointing all of that to us. But the big stock of the day was IT major Infosys. It has kick-started the earnings season on a solid note. The Bangalore-based tech giant has reported numbers which are mostly better than what the street was expecting. Kritika Saxena joins us now to take us through the fine print. Kritika, over to you.
Well, if you look at the top line now, on the top line it's pretty much exactly in line with what we were expecting. So in dollar terms, we've seen a growth of around 0.8%. In rupee terms, we've seen a revenue growth of around 3.4%. In constant currency terms, the growth has been around 2.6%. Net profit up by 5%, and margins were the big surprise, up by around 60 basis points when we were actually expecting a decline. Now remember, our margins have largely been benefited by a higher utilization at an all-time high of around 82.3%. Also, there were other levers that analysts say that have pushed up the margin, including cost optimization, provisioning of debt, which have enabled margins to come in better than what we were expecting. Of course, rupee appreciation has helped it by at least 50 basis points. Over and above that, attrition is a little bit of concern at 20.4%, but the management has been putting in together a plan to be able to bring down attrition, including 100% variable payout. So by the next couple of quarters, we should could see that 20.4% tempering down a bit. But let's understand the guidance really. The guidance of 7 to 9% has been maintained. Street was expecting the FY15 growth guidance to be lowered to 6 to 8%. But remember, the 7 to 9% guidance maintenance has been kept in mind with the September exchange rate in queue. So essentially, if you compare from September to December, the management in the analyst con call in fact also said that we will need to temper it down. So they haven't literally said the words, but if you take the currency fluctuation in the last one quarter, we could assume a decrease of around 1 to 1.5% at least. So that's the only little bit of a tempering down. Over and above that, revenue per employee has gone down by 0.5% in constant currency terms, largely owing to a little bit of pricing pressure coming in from energy and retail. So that's a bit of a concern. But all in all, let's not nitpick. It's a good quarter all in all.
Okay, it's a good start to Q3. Kritika, stay on with us. Kritika's tracking yet another story from the tech space, which we will just go back to. But for now, let's hear out the Infosys management spelling out their growth guidance outlook and how they see attrition rates moving forward.
Given the massive fluctuations that we have seen all around the world, and I mean, we are an Indian company, our reporting currency is rupees. So I think at the end of the day, we have to measure ourselves by how we do in rupee terms and revenue and profitability growth in rupee terms. And we don't want to get into this business of speculating on currencies and so forth. So what we have done is we are sticking to our plan, we are sticking to our guidance that we gave in the end of September, that the 7 to 9% that we mentioned as of the 30th of September, this is what we are holding ourselves to.
We also continue to focus on employee engagement, employee outreach programs. So we'll continue to do that. But it'll take a time. It will take a few more quarters. It's a very competitive market. There is a lot of demand for hard skills, and particularly with Infosys, with its training programs and other things, I think the employees in Infosys have a pretty big demand in the market, particularly people who have been trained and so on. So there are various reasons for it, but we believe that many of the efforts we have taken have started yielding dividends, and it will probably take a few more quarters for it to come back to where we believe it should be.
All right, so positive quarter at last in the market, almost heaving a sigh of relief there. Well, brokerages have been reacting quite positively as well to what we've seen from Infy. Sonia, you've been going through lots of those reports, I know. So what are the highlights?
Well, 9 out of 10 brokerages are positive on Infosys post their earnings, as you rightly mentioned. So let me start off with Barclays. They've maintained an overweight on the stock. They have a target price of 2,500, which is a big upside to where the current market price is. They say that the biggest positive is the margin surprise this time around. The client traction is quite healthy, and the fact that they've maintained their FY15 revenue guidance at 7 to 9%. JM Financial says that the volume growth at 4.2% is very healthy, and volume acceleration in a seasonally weak quarter is quite commendable. In fact, they say that Infosys performance will raise optimism as far as the successful execution by Vishal Sikka is concerned. So that, confidence will come back into the stock. Nomura retains a buy. They say that there are no negative surprises in the numbers. They're largely in line with estimates. The guidance is maintained in constant currency terms, and that's an important positive as well. And finally, IDFC says that it's a good set of numbers. They maintain their outperform, and they say that the margins are much ahead of street estimates at 26.7%. So clearly, most of the street believes that the stock will do well here on. Of course, there are small niggling worries, as Kritika mentioned, but overall, the mood is positive. But the markets gave a thumbs up to the numbers, so let's listen in to some reactions as well.
I think these are numbers which are bang in line. So obviously, it's honestly a sigh of relief for the market, saying it's not been a bad quarter. It's a quarter which is in line, which meets expectation. I think on the whole, stable and confident outlook. But I don't think it gives, beyond that, it does not give you any more indication in terms of how the next year is going to be. So maybe it's still early days from that perspective, but I think on the whole, very stable, very confident.
There has been a huge movement in the currency in last one quarter. If you see vertical-wise growth, for instance, whether it is financial services, whether it is manufacturing, whether it is energy, everywhere in spite of growth, the constant currency growth is good in all the verticals, but in spite of that, the reported growth is very low. Again, if you see, Europe has grown in terms of constant currency, but in reported currency, it is showing a decline. So, you cannot do much for that, and it was in line with expectation. The good thing, which I would say is that, and we have been saying this for quite some time now, is that they have identified the problem, number one, and secondly, they have got into the path to correct that.
All right, that's the sum and substance of Infosys numbers, but there was so much more news from the technology space. Tech Mahindra signed a definitive agreement to acquire Switzerland-based SoftGen. Kritika is still standing with us. Kritika, how will this deal impact Tech Mahindra's revenues?
You know, it was very interesting to see how just a couple of minutes before the numbers came out, Tech M stock jumped up along with Infosys. So it is interesting because it's a consulting business, and consulting typically is a very high margin business and have lower prices. So it makes sense for them. Plus, it's a steal when you look at the numbers. So they've the value for the deal is around sub $30 million plus. Unless when we were talking about the possibility that they may look at acquiring SoftGen, there was talk that the deal may go up to around $80 to $100 million. So in realistic revenue terms, it is a steal. There's $45 million of immediate revenue that will come in once the deal is closed. So March 2015 is what they have told us on the deal closure timeline, and mostly post that by April 2015 the $45 million should come into revenues. This is an all-cash deal, so no major impact on the balance sheet as a whole. But if you look at the kind of client addition, they will be absorbing around 450 employees of the company. They'll be taking in around 20 to 25 clients that the company has. So that will immediately give them a leg up. If not from April onwards, over and above that $45 million, it will be at least from December onwards.
All right, Kritika, thanks so much for that. So that's plenty of tech talk keeping the markets excited today. Time for a break now, but coming up, it's a market perspective from Udyan Mukherjee, and we'll also get you trading ideas for next week.